Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. It's Monday. Stock market's back open. Very exciting. What's going on today? Well, we're down about 100 on the Dow, about 150 on the NASDAQ, right? Okay, so over the weekend, I was reading a lot of articles. I like to read about the financial gurus, and it's funny to me that a lot of the financial gurus think that a massive bull move is coming. Well, I think we already had the bull move. Look, at so far this year, the Dow's up 3%, NASDAQ, it's up about 12%, and the S&P is about 6% in the middle. We've already had the run up, but they're expecting a major bull move. Now look, what we've got going on is we got 2 million people behind on their mortgage payments, 8 million people behind on their rent. All right, so we got the car repossessions. Car repossessions are at a record high. Credit cards are at a record level, meaning people are borrowing money. Why are they borrowing money? Well, 70% of the U.S. population live paycheck to paycheck. But none of this stuff matters. None of that matters to the stock market. The stock market is a completely different game. Now, what matters to the stock market? Well, only one thing, what the Federal Reserve is going to do. And we're going to get that on Wednesday. They're going to come out and they're going to raise a quarter basis points, and we'll see what the dialogue is that they give us. But why do we give so much power to this corporation that has nothing to do with the government? They're separate. They're not part of the government any more than Federal Express is part of the government, but yet we give them all this power. They've done more damage to our country than any other corporation. Now, I hope that someday they will be abolished. I don't think I'll get to see that in my lifetime. Some people believe we need the Federal Reserve. I am not one of those people. I think they do damage. I think we need to take away their power. All right, so you got these people, these gurus, they say that we're going up. Now, that's not my take. We may have already hit the high on last Friday. Last Friday, we were right at 4,100 on the S&P, right? And then the market dropped 25 points right at the close, 25 S&P points. So that's called a topping tail. Now, I think that will be the top. Now, we may get another push up to that level when the Federal Reserve comes out with their announcement. We may jump up before we go down. Now, why do I think we're going down? Well, what am I missing that all these gurus are seeing? Well, they're seeing this inverted head and shoulder pattern. If you're a chart analyst, you'll know what a head and shoulder pattern is, and it's inverted, it's upside down, but we've broken above the trend line. Everybody thinks it's off to the races. I don't see it that way. You see, the reason is I look at something different. I look at the junk bonds. Now, the junk bonds, you can pull up the chart. HYG is the junk bonds, and they're not going up. They're coming down. Now, what are junk bonds? Well, it's debt, right? This is the debt that the zombie corporations borrow. If the zombie corporations can't borrow money at a low enough interest rate, the zombie corporations will go away. They'll go to zero. And 20% of the S&P is zombie corporations. So when I see that junk bonds moving downward, I think the market is going to move lower. And that is my take. I'm staying with that. I think the next move is going to be in the downward direction. Now, a lot of people, you can argue that we've broken that trend line. That's off to the races. I get that. Your take's completely different. Takes two sides to trade the market, and that's fine. My take is that we're going to come down. We'll see how that all plays out. All right, let's move over to the real estate market. Now, I always read the articles on the real estate over the weekend, and this one comes out from Realtor.com. Let me give you the headline here. Cooling inflation makes homes affordable again. Okay, now if you read into the article, they're expecting mortgage rates to drop down to 4% this year. Well, let's start with the cooling inflation number. Now, it is true we were up at 9%, and I guess the Feds, they say we're down around 6 point something now, 6.5 or whatever. So it's coming down this downward direction. Now, here's my problem, though. My problem is if you measure inflation the way they did back in the 80s, we're still well above 10%. We were as high as 15%. Now we probably come down to 12%. Now we got the Fed funds rate. It's not even 5% yet. So what they're expecting, though, is the Fed to pivot. pivot. If they pivot, we're going to get a second wave of inflation. It's going to be almost hyperinflation. Now, the second wave of inflation is coming. Now, why do I say that? Why do I say it? Well, there's things that they don't see. Look at the dollar. Our dollar has collapsed basically 10%. 10% just in the last 2 months. The dollar has gone down against other foreign currencies by 10%. Well, what does that mean, Mike? Well, look, we buy stuff from other countries because we don't make stuff here, right? Well, we make dollars, we print dollars, and we ship those dollars out, right? We ship those dollars out and they send us all the goods that we buy in the store. Now, our dollar has gone down by 10% in the last 2 months against other foreign currencies. Well, that's going to be more inflation coming in because we have to pay 10% more for the goods that we're bringing in to buy. So inflation's not done yet by any means. Now, they'll tell you it's under control. It's not under control. There's going to be a second wave. The second wave will come when the oil prices get above $100. Now, some people misunderstood me. I don't think oil prices are going over $100 right now. They're sitting around $78. We could easily come down to $60, even $50 before we shoot up above $100. But I'm willing to bet that at some point this year, oil prices will get above $100 and continue higher. And this is very inflationary. So you'll know the second wave's coming when that happens. We may come down a little farther in inflation here, but we have the dollar collapsing, very inflationary. We have a government that refused to not cut spending, so they're inflationary by that $1.7 trillion spending bill. Very inflationary, right? As long as we print money we don't have, that is inflation, right? Price of oil goes up, that's inflation. The dollar coming down, that's inflation. All these things are adding up to they haven't won the war against inflation. Everybody's expecting this pivot. They're expecting interest rates on mortgages to come down to 4%, and this will bring the house prices back down. Well, they'll bring the mortgage rate back down, and that'll make more homes affordable, and then they'll send the homes back to new record highs. That's what they're expecting. Now, they do say, if you read farther in this article, that they're looking for a balanced market in 2023. A balanced market means the same number of buyers as the same number of sellers, and we'll just stay at this price. Now, yeah, that may be your take, and that may be what's happening in your area. But look at that. There's no balance in this market at all because the buyers have gone on strike. The buyers have gone away. Yes, we have sellers, not a lot of them yet, but it's going to become more and more. You see, sellers will jump back into the market as they see the prices coming down. They see the prices coming down, they get a little frightened. Now, the prices aren't coming down yet because the sellers, some of them are pulling their houses off the market because they got to get that price that Billy Bob got. Everybody wants what Billy Bob got, but those days are gone. I don't think we're going to hit those prices again for another decade. That's right, a decade out. I think we're going to come down. I think we're going to come down fast and hard, about 50%. And I don't think they're going to be able to pump it up with printing of money. Now, why do I think we're going to come down about 50%? Well, a lot of you are probably old enough to remember the subprime crisis, right? Well, we have a subprime crisis going on today. A lot of people don't realize that. We have this big subprime mess going on right now. It's in the auto industry. Now, people go, Mike, why are you talking about the auto industry? What does that have to do with the real estate market? Well, you see, like how the junk bonds lead the stock market. You can tell which direction the stock market is going to move by looking at the junk bonds. Junk bonds are going down, market's going down. Junk bonds are going up, market's going to follow it higher. Well, the auto industry tends to lead the housing industry by 6 months to a year. 6 months to a year in advance, the auto industry leads, and the auto industry is crashing and burning. See, there's a subprime market there. The subprime market happened during the pandemic. You see, people, they didn't work. They just stayed at home. There was a lockdown going on, and then the government, they gave you an extra $600 a week in unemployment pay. And anyways, what people were doing, they had no job, and they went on rent moratorium, so they didn't have to pay their rent. They had no job. They're getting this money from the government. So they just go into the car dealership, and they go, well, I want to buy a car. And the car dealerships are going, great. And they were just selling you a car, but they were selling you the car $10,000, $20,000, $30,000 over the list price, right? But they didn't care because you had income income. You had income coming from the government in the form of stimulus checks, in the form of unemployment. So there was this subprime, right? You didn't have to pay your rent so you could make your car payment. And they were basing it on that. They were giving you loans. And what happened? Well, what happened is we got this thing called negative equity in the car market now. There was people that, well, you see what was interesting though? They would buy the car. They would buy the car, right? And then they would go on forbearance. Did you know that there was a forbearance program for cars? That's right. They could not repossess your car. They look at you, these kids, I call them kids, let's call them 28, 30-year-olds. They were going in there, but let's say they went in and bought a brand new Porsche, right? Because they got the money from the government. They don't have to pay their rent. So that's what they were using to qualify for the loans. Now that's completely idiotic. Now today, the lending standards are getting very strict. Because why? Because they have for all these repos now, 10, 15,000 a day. I mean, that's like crazy, right? And they have, talk about negative equity on these cars. They have a lot of negative equities, but these kids, they go in and they buy a Porsche. You know what they do? They wouldn't make a payment on it. They'd get to drive the Porsche around town for a year, 2 years before they're allowed to repo it because we were in the pandemic. Well, look, they got all this negative equity. They're surely not going to start making payments on their Porsche now. They can't afford the Porsche, not getting the money from the government anymore. So there's a subprime mess, Now, if you were in the subprime market, 1 out of 4 of the subprime are over 30 days late already. So 25% of all the loans that went out are already 25% late. 1 out of 6 are over 90 days late. Okay, now you go, well, what about the prime market, Mike? The people with the 800 credit scores. Now, normal in the car industry, normal is about 1 to 2% delinquency. But even in the prime market with 800 credit scores, it's jumped up double that. It's 3 or 4%. So it's coming down. I'm telling you, the repo in all these cars, they got negative equity. It's a subprime mess. Now, this is what's going on in the car market right now. Now, this translates to the real estate market because this is exactly what we're going to be seeing in the real estate market 6 months to a year from now. We're going to have another, well, that's not really a subprime mess, but we're going to have another negative equity mess because people that went out and bought the houses in the last year or two are already underwater. Look, they put 5, 10% down. Market's already down 12%, right? If they wanted to sell their house, they'd have to bring $20,000, $30,000, $40,000 just to the closing table just to get rid of their house. You think they're going to continue paying on their house? Maybe in your area, everybody's going to keep paying. I don't know. That's not my take on the market. My take on the market is they're not going to keep paying. Look at banks. They know what's coming. The banks know what's coming. They're putting away reserves. They're raising their reserve losses. Billions and billions of dollars are being set aside because they know these people are not going to pay. They've seen this movie before, right? They've been through the subprime crisis. So they're setting aside billions of dollars. But what's going to happen? Well, they're going to take the houses back. They're going to call me up and they're going to say, Mike, we got these houses we want to sell. And that's my job. I'm a real estate broker. During the subprime mess, I was doing short sales. I was doing bank-owned properties. It's all coming full circle. We learned absolutely nothing from the subprime mess of 2008. We didn't let it drop. We didn't let it complete. The bubble has gotten bigger, right? The bubble's bigger. And this time it's going to complete because they're going to print trillions of dollars, but they're not going to be able to pop it up. So the banks are going to take back these properties. There's going to be forced selling. The people that have equity are going to get scared because the equity is going to be going down, right? And soon that equity is not going to be equity. It's going to be negative equity. Then they have to give it back to the bank. It's a circling the drain. So this thing about looking for a balanced market in 2023, good luck with that. Good luck with that. We'll see how that plays out towards the end of the year. Now, the bargains aren't here yet. They're probably not going to be here till 2024, maybe even 2025. But if you just sit back, sit on your hands, get some popcorn, wave it to people. Look there's a mess out there and it's not played out yet. It's playing out in the car market right now, but the car market is 6 to 12 months ahead of the real estate market. The real estate market's going to have negative equity. It's going to be falling down at 40, 50%. Of course, in your area, it's still going up, and I get that. Look, thinking you want what Billy Bob got, and it could happen for you. Maybe it will. Anyways, if you like this stuff, I'm Tall Mike. Give me the thumbs up. Why not? It's Monday. Get out there, everybody. Have a great Monday. We'll talk again later in the week. Fed Day's Wednesday. You want to hit that subscribe button. We got a lot to talk about this week. Very exciting. I'm Tall Mike. Bye-bye now.